As we have discussed earlier, aside from subject matter, we have the criteria. So it's very important to be able to differentiate between criteria and subject matter. Subject matter can be based on financial performance or conditions, or non-financial conditions or performance. Okay. However, when it comes to criteria, okay, so the criteria will determine what kind of audit engagement uh, that is being engaged upon by the intended users and the practitioners. So basically, there are three. Okay, so audit of financial statement, which is based on uh, Philippine financial reporting standards, and we call the assurance on internal control, which is established internal control framework. Example, COSO. This is what we're talking about here. Is like what kind of engagement is being done. Is it engagement in audited of financial statement, which we know what are the financial statement, or is it intended only to give assurance on the internal control? As we said, as if you will research on internal control is actually how the property of the company is being safeguarded or free from theft or embezzlement, right? And there will be procedures that being done by the auditors to determine the quality of internal control, which is not the same with the financial statement. Basically, and when audit of financial statement, they will be doing samplings on the reliability and accuracy of the financial report based on the, as you said, when you say a financial report, basically the main source of these are the journal entries, including the source documents that is being analyzed, because in accounting you analyze and then you record. So in audit practice, basically they will come to those regions where the financial statement are being prepared. You have a financial statement because you have journal entries that is posted on the ledger. Okay, but most of the time these recordings do not really reflect how the company's assets are being protected. Okay, so there will be audits on internal controls that is set with a different framework. As I mentioned here, the audit of financial statement is based on the Philippine financial reporting standards, while the audit of internal control established internal control framework. And we have what we call compliance audits, which is based on the regular applicable laws, regulations, or contracts. So some audits are not intended to audit the financial statement nor the internal control. They are with compliance, because some companies with specific industries, for example gambling, they are following strict compliance with the government rules. Not only gambling, like mining, for example, those who are involved in dealing with natural resources like gold, because when you are working with the environment, like not only mining, like forest, like those dealing with lumber, wood, for example, they have to comply with government rules and regulation. So important for the those who want to invest in this kind of business to be sure that this company they're going to are compliant with the government. Otherwise, it will be very risky for them to invest in this kind of companies. That's why they will have to engage the services of a CPA or an auditing firm to perform what we call compliance audits. And as you go along, you will have this characteristic of a suitable criteria. You have the relevance, completeness, reliability, neutrality, and understandability. As these criteria are also similar with your financial accounting that were discussed. What are the meaning of relevance? Its relevance should be able to contribute to the decision making. If the information is not able to give you the information that will change your decision, then it's not relevant. Completeness is, as we don't, basically the simple word from completeness is that they do not miss information that are important, especially. Okay, They don't choose what information they only want to give you. And reliability criteria allows reasonable, consistent evaluation on measurement of subject matter, including where relevant presentation and disclosure when used in similar circumstances by similarly qualified practitioners. And again, there is also a need for neutrality. It means these are free from bias. Basically, the bias on this kind of information is bias in favor of the people responsible, right? Because the users of the financial statement want to make sure that there is no person being favored when it comes to the information that they're getting, because most likely the person to be favored are the person responsible for the preparation of financial statement. If these are statements are biased, then they will be coming up with the wrong decision. Understandability, it means it is understandable, can contribute conclusions that are clear, comprehensive, and not subject to significant different interpretation. That is one thing. The financial statement should not be subject to different interpretation. It means whoever person who is reading the financial statement should be able to arrive with the same conclusion. So it should be easy to understand.